Joining me now, former chair of the White House Council of Economic Advisors, Kevin Hassett, and Strategic Wealth Partners CEO, Mark Tepper. Kevin, if I may begin with you, your reaction to President Biden saying he thinks everything's fine. 0.1% was the monthly change. That's what he's stressing out there to the American people who are really feeling the pain of 8.3% inflation year over year.
Right. Well, let's focus on the facts first, that we've had 2 negative quarters for GDP. We're looking like we're about to have a 3rd negative quarter in a row. Every time we've had 2 negative quarters, it's been a recession, and recessions are really hard times for Americans. And so to have a White House basically in a recession denying that the economy is struggling and denying that inflation is a problem is exactly the kind of thing that would make markets panic, because what markets want to see is that policymakers understand the challenges ahead and they're trying to do something about it. And let's just look at the simple intuition of why GDP is declining and why inflation is the cause. If you look at inflation over the last 12 months, then a typical American family has to spend $460 more a month in order to have the same consumption they had last year. If their wage didn't go up by $460 a month, and few people have been that lucky, then their consumption has to go down. If their consumption goes down, then so does GDP. We see that force everywhere. If we don't get inflation under control and government spending under control, it'll continue. And, you know, I really don't even see what the bottom will be if the fiscal policy people are in denial, because the Fed can't do it alone.
I think you're right, Kevin. And a lot of people were very off-put by the president's reaction later that day after CPI came out, a party at the White House to celebrate the so-called Inflation Reduction Act, Mark. You know, this is $739 billion more of spending that hasn't necessarily been baked into the cake. You've got forgiveness of student loan debts as well. A lot of people feel this inflation has become embedded in the economy, and that it becomes even more difficult to tamp out, even if Jerome Powell goes a full point when the Fed meets next week.
Like Kevin said, I mean, you can't do it on the monetary policy side all by itself. You need the fiscal policy to be in harmony with monetary policy. So the Fed is already, look, the Fed's been crystal clear. They've been telegraphing their hawkishness. They've been saying now for a couple of months that they are going to fight inflation, you know, as hard as they possibly can. They're not going to take their foot off the brake anytime soon. And the market's kind of just been like, you know, saying, I don't believe you. I don't believe you. I'm calling your bluff. But look, I think the market's finally starting to digest what's happening. And as far as President Biden, with the timing of his victory lap, talking about the Inflation Reduction Act, which, you know, doesn't reduce inflation. And as you mentioned, you couple that with the student loan handouts, it's actually going to increase the deficit. Poor timing. And it's showing that they don't know what is really bothering American people. And what's bothering American people is sky-high inflation. That remains the #1 concern with Americans, the #1 concern with voters. And we'll see what happens come the midterms now.
And speaking of the so-called Inflation Reduction Act, gentlemen, you know, that's the name that the administration gave it, but it really was a climate change and health care bill, if you want to spell it out. And, of course, President Biden really pandering to the progressive left when it comes to climate change, and he's getting a lot of blowback for his $900 million plan to build EV charging stations across the country. Remember, the average cost for a new electric vehicle is now more than $66,000. Kevin, that is not affordable for many people. The infrastructure isn't there yet in place to be making such a dramatic change towards electric vehicles and overall green energy. And that's what many people are concerned about right now, that this will put Americans further in the hole.
Right, and you know, let's just you know, as an economist, you know, put politics aside. The fact is that we are now in one of the most serious times, the serious economically challenging times of our lifetimes. That we've got an inflation spiral that's underway, and we need a government that's serious about it. And if we're out there, you know, forget about the subsidies for electric vehicles, although I'll talk about them in a second, but we're out there basically telling banks not to lend to oil companies to drill because it's not like, you know, an ESG approved activity, then you're attacking supply. And so the #1 problem right now is that they're feeding demand and attacking supply. With respect to electric vehicles, I wrote about this. We did a study at the Hoover Institution right before the election with Casey Mulligan and other co-authors. And the Biden plan basically to move everything to electric vehicles vehicles, which California is trying to do. The problem with it is that if electric vehicles are the only vehicles out there, then we have to increase electricity production in the U.S. by 25%. We did the estimate. And 70% of electricity right now is fossil fuels.
Right.
And if they stop consuming fossil fuels, then 70% of the electric grid is offline. And so they're basically rebooting 100% of the electric grid. It's just not going to happen. But the problem is when they're out there advocating things that are this irrational, then markets start to panic. It's like these guys don't have a clue. And so while they're saying, hey, let's reboot 100% of the electric grid, something that we've added 10%, I think, over the last 20 years, if they're saying that instead of here's what we're going to do to fight inflation, we're going to follow the Ronald Reagan playbook, we're going to feed supply, we're going to attack government spending, and we're going to help the Fed do its job, then there's no bottom. And I think the market should stop being surprised by the negative policy shocks and stop being surprised by positive inflation shocks and understand that this is going to get really bad. The Fed's going to lift rates at least 3 more times at about 75 basis points. And, don't be surprised when they do.
I think, Kevin, the market started to realize that this week it was a little bit of a delayed reaction, as you suggest, but I think it has become crystal clear what's to come this fall as we head into the winter. And you make a great point with respect to electric vehicles and how we generate electricity in this country. It almost defeats the purpose, which also adds to the theory of why we're not there yet to kind of make the switch over. Having said that, let's switch gears for a moment, Mark, because Janet Yellen praising the IRS this week and the administration's plan to spend $80 billion for more agents and enforcement. Listen.
I've directed that enforcement resources will not be used to raise audit rates for households making under $400,000 a year relative to historical levels. In fact, we expect audit rates for honest taxpayers to decline once the IRS has the right technological infrastructure in place. And that means a simpler tax filing season for taxpayers who are doing everything right.
Unfortunately, Mark, the experts are suggesting that what this is going to do and the expansion of the IRS, not just with the money it's being funded with, but also the agents that are going to be added, they are going to target exactly those people that she's saying it's not supposed to target, because that's the only way to generate the revenue to be able to pay for it.
If it's not going to target people making less than $400,000 a year, I don't know where they're going to get these revenues from, because if you think about it, Jackie, the wealthier you are, the Mark Zuckerbergs of the world, the wealthier you are, the more likely it is you have top tax advisors on your team that are advising you on ways to legally use the tax code to your benefit and save on taxes that way. And the Joint Committee on Taxation, which is bipartisan, by the way, estimated that 90% of these expected revenues are going to come from small businesses making less than $200,000 a year. So, look, you don't have to have a PhD in mathematics to know that that's less than $400,000. And if you think about it, the low-hanging fruit for the IRS is to go after those people who may have accidentally fat-fingered a number or two doing taxes on their own because they wanted to save a couple $100 in paying someone else to do it on their behalf. And I feel like, as far as the small businesses go that they're going to target, they're probably going to target those small, single shingle businesses filing on Schedule C, the sole proprietors, the partnerships, the LLCs, not corporations, especially those that are cash-heavy businesses. So, you think restaurants, barber shops, hair salons, stuff like that. And then with regards to these 87,000 IRS agents, Jackie, I don't know where you're going to find 87,000 people. You can't find 87,000 people right now to make a pizza or to cook a steak to medium rare without overcooking it. I don't know how you're going to find people, 87,000 people that have a vast understanding of the most complicated code that we have in our country.
Yeah, I think you bring up some excellent points. This is going to be a wait-and-see situation. We have to see how it plays out. Unfortunately, many Americans are very anxious about it as we head into to see exactly how it's going to look for real people. Kevin Hassett, Mark Tepper, thank you so much. Great to see you both, as always.